for the most part, I think traders need to do a really good job of making a game plan ahead of time. We never get smarter, once the market starts ripping in one direction or doing anything crazy. What's your game plan? You going to trade it with full risk? You going to trade it with increased risk? Are you going to size down? You're going to trade combines? You're going to just trade a demo account? You're not going to touch it at all? You're just going to go, touch grass? There's not a wrong way to do things in this market. I see a lot of traders don't trade FOMC. Only gamblers trade news. You can't trade news. It's not true. It's just not true. As a whole, though, I think it's very difficult. It's the stakes are higher, the movements are faster, the risk is larger, right? It's just inherently more difficult. You're trading during a period where volatility is about to change. You don't know how much because nobody knows what those rates are going to be. Nobody knows how the conference is going to go, what the questions are going to be, how their response is. And even if you knew all of that, to the T, which you don't, you have no idea how the market's going to react to it, which is what we're looking at here. I've never heard a case be made where you should not know how much risk you have on the line and you shouldn't accept that. I do not understand a case that can be made for that because you don't know what's going to happen next. I don't, you don't, nobody does, okay? That's why we structure risk. That's why we use stop losses. That's why we trade in large sample sizes.